And so, Bryan, I think the Connecticut Green Bank has taken multiple approaches, sometimes having a standard offer product for the private sector to pick up as they wish. Smarty Loan is very similar to Michigan Saves program. But when it comes to LMI, you've targeted a specific partner, much like the New York Green Bank, designing a product, a one-off product, if you will, to serve that market. How did that partnership develop, and tell us a little bit about that product?
Great, and I love the idea of the sealed model. I mean, the idea of leveraging financial innovation of a solar PPA lease to energy savings agreements and energy efficiency is great. It's financial innovation. It's also marketing innovation, right? Because at the end of the day, we want the customer to be better off immediately. So in terms of the low to moderate income space in Connecticut, so we've got a legislative target of 300 megawatts of residential solar by 2022. What does this mean broadly? I just did the calculation this morning. It would be the equivalent of 3 gigawatts of residential in California. I don't know if that's a lot or a little. It seems like a lot to me. The LMI solar market in Connecticut, if you compare it to non-LMI, currently needs about 2 to 5 times more penetration in order to be at parity with the rest of the market. So it's a really, really big gap. If you look at this market segment, the energy burden for these households, as an example, a New Haven home that heats with oil currently uses about 6.5% of the household income to pay for energy. The typical household in New Haven may pay 4.5%. So how can we bring that back to parity so that those homeowners can use their income for other things that they need in their daily lives? The current solar PV lease market doesn't fully address this market segment. You know, you're looking at FICO scores in the area of 600 to 650, DTIs of 50%. And this market segment, the low to moderate income, are more likely not to apply for financing because they often see themselves as not being able to get approved, right? So they see financing as something that's not for them. So what we did was we went out and we worked with UConn. They did a study. They took a look at the numbers. The numbers really showed a problem between the disparity between low to moderate income and low to moderate income. So we acknowledged the problem at the board level. We had a conversation about the differences and the disparities. We issued an RFP in the market. We said it's a public policy of the state of Connecticut to ensure that solar PV is available for all. Through that process, we identified Posigen, a company out of New Orleans, Louisiana, that was really focused on this market segment. We had a performance-based incentive that we increased. We doubled it for the LMI space just to support more economics there. In terms of our structure for the product, we actually have a $27 million financial fund with Posigen. We are $5 million of subordinated debt in the capital structure. We have an option to exercise an additional $5 million. We think there'll be a senior investor in the capital structure that'll step in our spot, and we're currently about to close on that transaction. So that's a good sign. And Posigen really focuses on community-based strategies to get this market moving. In terms of some of the focuses of the Posigen product, so it is a solar lease product. Homeowners will pay $55 to $70 a month fixed for 20 years for a 4.5 to 6 kW solar PV system. Those are set systems. They're not custom designed. It's one size fits all. And there's also an option for an energy efficiency ESA as part of the deal that actually the savings are guaranteed through this financial structure. I'll talk about that in a second. Bridgeport and New Haven have established beachheads for Posigen. We're expanding into Hartford in a few weeks. They've created 50 jobs and are adding 30 more jobs. The goal is to target 1,000 homes, 6 megawatts of solar PV deployment. In 9 months, we've gotten 900 applications in this market, which is great. 60% of those applicants roughly have rooftops that are suitable for solar PV. This is actually a pretty high number to me. It tends to be 20 to 30%, but 60% in these urban areas tend to have suitable rooftops. 25% of those households that have suitable rooftops, the solar PV systems are lost for some financial or non-financial reason, for one reason or another. But those that do move forward, 65% of those applicants that move forward, 100% of them undertake a Home Energy Solutions income eligible. It's kind of a direct install energy audit, so they do undertake energy efficiency measures. And 65% of those who do that also do deeper measures through the energy savings agreement structure. So the household will pay $10 more per month for a 20-year period, effectively getting $2,400 worth of additional measures by paying for it over the lives of those measures. We typically see the conversion rate of the Home Energy Solution Income Eligible program to be about 25%. In this case, you're seeing a 65% uptake to deeper measures, which is great. So, you know, is solar the kind of sexy clean energy technology that opens up the deeper energy efficiency market? I think that test is out there, and we're seeing really good results so far from Posigen in terms of solar PV being a gateway to energy efficiency. So.
Just to follow up on that, Bryan, what role does the Green Bank's capital play? Is this enabling, because you know, I think everyone here understands the challenge of serving LMI. Is it simply that Posigen says all we do is LMI, we're not looking at anything else in that kind of focus, or is it that your capital enables them to take on slightly more risk than a private investor would at this stage? How exactly does the Green Bank's involvement transform this market?
So I definitely think it's a bit of the latter, but you know, this is a case where we're trying to prove to the private sector that the risks are lower than the perception. And we'll see that over time. We'll actually see that if we're able to exercise the second $5 million with a private investor, which we think will happen. So that's the first thing. But the second thing is it's important, you know, Seth mentioned it earlier, Jeff mentioned it, you know, there is a role for the state in interacting with the private sector to ease the market and to help it move. So supporting their community-based marketing strategies and all their activities in neighborhoods around the state is a very important role that we play as well. So financial innovation, marketing innovation, at the end of the day, we want to reduce risk and drive more investment.